Okay, ladies and gentlemen, welcome back again to this video where I'll be taking you through uh, another question which is related to the Acca MA1 paper. Here we are looking at, uh, at the topic of budgeting. Okay, this has to do with budgeting. All right, so we are given information which relates to a production budget, and our purpose here is to be able to come up with the quantities which have to be purchased given a certain sales information. Okay, sales and production information. So let us read the question carefully and then start to answer the question. By the way, it is a good exam technique to start with the question requirement. Our question requirement is on determining the quantities that have to be purchased. Quantities that have to be purchased. Now, we are told that there is a material called X which should be procured in the month of January. Okay, but we then have to read through the question scenario to understand more details for us to be able to attend to the question requirement. So we have got a company called JID, okay, Private Limited, which manufactures a single product. It expects to sell 15,000 units. Okay, these are the expected sales, 15,000 units of the product in January and 20,000 units in February. So in February, they are now expecting 20,000, which are 5,000 more than those which were expected to be sold in January. Closing inventory of the product is 10% of the next month's expected sales. So this statement simply means that the closing inventories are found by 10%. Okay, by multiplying 10% by the figure of expected sales. By expected sales. So say for January, what is the closing inventory figure? Okay, so you then have to know how much were the expected sales for January, and you are told that the expected sales for January were 15,000. Okay, so which means the closing inventory, all right, for January were actually the expected sales in a December, all right, but excuse me, not December, February rather. Sorry. Okay, so the expected sales for February we are given as 20,000. All right, so which means the closing inventory in January should be the 10% multiplied by 20%, because this gives us 2,000, because the 20,000 units are the expected sales for February. So the closing inventory for January should be 10% multiplied by 20,000 units of expected sales for February, which gives us 2,000 units. All right. What about the closing inventory for February. Do you think we have that information? Obviously, we don't have that information. But what about uh, the information regarding um, the opening inventories? Okay, so for opening inventories, for opening inventories or opening stock for January, we can use the same statement here. 10% of the month's expected sales. That same statement for closing inventory can also be used to determine the the opening inventory. It was for closing inventory, but we can use it to determine the opening inventory values. Okay, why? Because the opening stock for January is equal to the closing stock for December. Using the same statement, because closing stock is the same figure that is going to feed into the opening stock. Are we together? So, if the expected sales for January were 15,000, it means the closing inventory in December was going to be 10% of 15,000 units. This gives us 1,500. So this is the same figure that is going to come for January opening inventory. Are we together? Why am I interested in determining these figures, opening inventory, closing inventory, when the question simply wants us to calculate the amount, the quantities to be purchased in January? Now, you cannot determine that figure if you do not know these other figures I'm talking about. So there is what is called the production budget. For you to determine the amount of materials that has to be purchased, you need first of all to have a production budget. You need to know how many units should be produced, how many should be produced. So there is a formula, ladies and gentlemen, for production. You need to have the sales figure or expected sales figure, all right, less opening stock, add closing stock. So you can see these figures are actually acting or behaving in a different way than they do when we prepare an income statement. Because when we prepare an income statement, when we determine the cost of sales, it's actually sales, add opening stock, add purchases, less closing stock. That's how we normally do the income statement. Okay, but in this case, when we now want to come up with the production budget, it's the other way around. So it's expected sales or the sales less opening stock, add closing stock. Okay, so using this information, you can see that our production now, the sales, I'm using the sales, but they are in quantities or they are in unitary terms, not in dollar terms. So our expected sales in January were 15,000. So 15,000 less opening stock. The opening stock is the figure which we have just calculated as 1,500 units plus the closing stock we have determined to be 2,000. And what do we get? Obviously, we are going to get 15,500. Okay, so this is the production in units. These are I mean, the items we expect to sell. We expect to sell 15,500 units. But now we are told that each unit requires 10 kgs of material X. So we then have to come here and say, how many units shall we need? Okay, I mean, how many kgs? Because each unit requires 10 kgs of X, of material X. But we want 15,500 units, which means we want 15,500 multiplied by 10, which gives us 155,000 kgs. Okay, but we then have to say we just use the same formula. All right, so these are the actually the units to be produced. I mean, the quantities of materials to be produced, that's 155,000. But we then have to say, don't we have, I mean, other raw materials in stock, other kilograms in stock? So we say, we add, I mean, we say, we deduct opening stock of materials in stock. So how do we know these materials in stock? We come back to the question and say, closing, okay, it's saying closing inventory of material X is enough to make 20% of the next month's expected sales. All right, so we can use the same trick as we did before. All right, because we are being told that the closing inventory of material X is enough to make 20% of the next month's expected sales. So let us use that statement to be able to assist us in our computation. So before I start the computations, I just want to mention that this statement is just a statement used to throw some students overboard, just to dazzle you in the exam. You might feel as if it's meaning nothing, but it is actually meaning something. Okay, it is simply saying that the closing inventory of material X is going to be 20% of the next month's sales. So obviously it is going to be 20% multiplied by the February sales, which are 20,000. So in January it is going to be 20% of 20,000. That's 4,000. All right, multiply. Remember, these are units of products to be sold, so you have to multiply by the 10 kgs because each unit requires 10 kgs of material. So you can see that the closing stock in January is going to be 40,000. That's 4,000 multiplied by 10 kgs per unit. So that's 40,000 kgs. So that's the closing inventory. So remember, our formula is going to be here, it's less opening stock, and here it's going to be saying add closing stock, which we have determined to be 40,000 kgs. Now let's find the opening stock to finish our computation. Okay, so for the opening stock, if we have used a trick that the closing stock was 20% of next month's sales, and we have determined it to be 40,000 kgs, as you can see there. What stops us to determine the opening stock using the same trick? Okay, so the opening stock is also going to be 20% Okay, 20% of the expected sales in January. The expected sales were 15,000. So that's 15,000 kgs. I mean, these are units multiplied by 10 kilo per unit. So that's 20% of 15,000, that's 3,000 multiplied by 10 kgs. This gives us 30,000 kgs. But remember, here we are deducting. So we should end up with a figure of something there. So that's 155 minus 30, that's 125, plus 40, that's 165,000. Okay, so you can see that the question was just intimidating us for nothing. It was actually a very, very easy question. So if this explanation or if this presentation has been useful to you, please just subscribe. Okay, just subscribe to the channel, click the notification bell so that you'll be notified whenever we upload similar videos. Okay, and don't forget to share and like the video as well. Okay, let us do another question to cement our understanding.